Welcome to Dual Edge Research. Different markets, one research philosophy. We believe successful investing isn't about predicting the future. It's about consistently identifying higher probability opportunities through objective, data-driven research. That philosophy drives everything that we do. Whether we're analyzing thousands of stocks or hundreds of thousands of commodity spread combinations, the process is always the same. Filter, rank, select, execute, repeat. That research powers two specialized newsletters. The Bull Strangle newsletter applies the research process to stocks and options, identifying high-quality companies for systematic option income. The Smart Spreads newsletter applies the same discipline methodology to seasonal commodity future spreads. Through research into seasonality, historical performance, forward curves, and trade selection, our goal is simple. Identify higher probability opportunities backed by objective historical data. Today we're focusing on smart spreads. Let's begin. Have you ever wondered why two traders can take what appears to be the exact same commodity spread trade, yet one consistently outperforms the other? The answer may surprise you. Most commodity spread traders begin by answering one simple question: should I buy the spread or sell the spread? If history shows that buying has outperformed selling, the decision seems straightforward. Place the trade and then hope history repeats itself. But after analyzing more than 500,000 historical commodity spread opportunities across the energy, grain, livestock, metal, and soft commodity markets, I came to an important realization. Direction is important, but it's only the beginning. That research included more than 500,000 historical spread combinations across virtually every major commodity sector. The objective wasn't simply to determine whether buying or selling worked best. The objective was to understand why certain trades consistently outperform others. Very early in that process, one thing became clear. Direction alone could not explain the differences. Think of direction as opening the right door. Once you walk through that door, there are still many decisions that determine where you'll ultimately end up. When should you enter the trade? How long should you hold it? Which contract months have historically performed best? Would adding a third leg improve returns or reduce risk? Does the current forward curve support the seasonal tendency? Every one of these decisions changes the historical characteristics of the trade. In some cases, the differences are remarkable. The spread entered just a week or two earlier can produce dramatically different historical results than the exact same spread entered later. One contract combination may exhibit exceptional consistency, while another appears almost random. The direction never changed, everything else did. That realization fundamentally changed the way I approached commodity spread research. Instead of searching for one perfect indicator, I began asking a different question. What combinations of characteristics has historically produced the highest probability opportunities? Today, every potential trade begins as one of more than 500,000 historical spread combinations. From there, multiple independent research filters evaluate different characteristics of every opportunity. Each filter removes lower quality candidates. Each filter adds another layer of confidence. No single statistic determines the final recommendation. Instead, the best opportunities emerge when multiple historical favorable factors align. This video marks the beginning of a new series exploring the major decisions involved in constructing higher probability commodity spreads. In the coming weeks, we'll examine each of these research components individually and show how they work together to identify stronger trading opportunities. In the next video, we'll explore one of the most overlooked aspects of seasonal trading: timing. Because knowing the right direction is important, but knowing when to enter can completely change the outcome. Thanks for watching. If you enjoyed this video, visit bullstrangle.com for additional research, education, and the Smart Spreads newsletter. For a deeper dive into commodity spread trading, be sure to check out my book, Trading Commodity Spreads, which is available on Amazon. We'll see you in the next video.